Greetings, this is Fred Barstein, contributing editor for wealthmanagement.com's RPA Edge. I'm here at the Wealth Edge Conference in Hollywood, Florida, with a guest, Rick Shoff from Captrust. Welcome, Rick.
Hello, Fred. Good to be here.
Good to have you. Wanted to talk a little bit about Captrust and their history and their growth and what it looks like for the future. So tell us a little bit about Captrust.
Sure. Well, we've been at it for a long time, as you know, Fred. We really felt, it goes back 30 years.
Right.
There were a number of smaller firms, I was one, and that really saw this opportunity to be an independent advisor, working as a fiduciary across multiple business lines, so retirement, wealth, endowment, foundation. And we were all out there doing it on our own. Mm-hmm. And then eventually we found each other. So fast forward, we went from a small regional firm, obviously now, to a large national firm. But in many respects, when we talk to a new firm, we really just say, we're just a bigger version of you, because it's true. So,
right.
So we've had a good run, and it's going on 30 years now. So.
And how many advisors, wealth and retirement and assets on each side?
Yeah, so we have around 1,100 colleagues total,
right,
in the firm, and we are a fully integrated business.
Right.
So everybody at Captrust is an employee. And of those 1,100, approximately 500 are advisors.
500.
And if you look at that group of advisors, about 60% of them are what we would say is a lead advisor.
Right.
So they have an office maybe in one of our cities. And then the other 40% are on their team. So most of our offices are teams, and those we call them relationship managers, but we count them as advisors. So, and then it's interesting, we don't think of, our advisors don't think of themselves as wealth versus retirement versus endowment and foundation, although they all have an area of specialty. But, we're trying to add value so that if I'm a wealth advisor and I have a business owner, well, guess what? They have a retirement plan.
Right.
And so if you were that advisor, you wouldn't necessarily go try to take the plan, but you might work with one of your partners in our firm.
Right.
And that same business owner probably sits on an endowment of foundation. So we don't segment our advisors. I think most of our advisors would say, I have a lane that I focus on, but I'm trying to add value to all my clients across all the different services that we offer. And our biggest growth engine now is adding additional services to existing clients.
So I've noticed in the last 4 or 5 years, Captrust has been focused on, attracting more on the wealth side, on the retirement side. Why is that? And when a wealth manager is looking for, to join someone bigger, and they look at the RAA aggregators, and also, the competitors on the RPA are looking at wealth. What's different about Captrust, and what kind of advisors are you attracting?
Yeah, well, I'll go back. So we are probably acquiring more wealth-focused RIAs now than institutional or retirement. Some of that's just a numbers game. As you know, there's just a lot more wealth RIAs out there of size than there are retirement, so it is a bit of a numbers game. But in the early years, I'd say 2006 to 2016, we really did focus mostly on acquiring retirement-focused advisors, because we really believed we had a clear competitive advantage. And we always had a wealth management business. Some people didn't know it, but as we continued to build that, now we have a clear competitive advantage on both sides. Yeah, you add into that the numbers, right? There's just more wealth management firms, and that's why we're doing more deals. Now, what we find is that most firms are solving for the same things. It's either business complexity, they build their business, when you go from 1 million to 5 million, that's hard. Going from 5 to 10, exponentially harder. 10 to 20, rarefied air. So that's complexity. And so you could be a really successful RIA, and you get to a level of complexity, and you say, okay, am I going to double down again? And it might take me 10 years to go from 10 million to 20. Or could I fold in with somebody and get there quicker and be focused on the things that I like to do? So business complexity, succession, obviously, liquidity, all the things that you hear, G2, and then growth. So, we're proud. We are unapologetically a growth company.
Right.
And so we always think about how can we grow career path for our people. And so I think though, when we talk to a prospective acquisition, those are the things that usually I think cause them to say, I think Captrust is the right firm.
Final question is, Captrust has been early on the convergence of wealth and retirement. How are you seeing you leveraging the retirement plans to grow wealth management, and maybe the other way around as well?
Well, we call it our chicken sandwich. So I think everybody's probably heard the Chick-fil-A story, right? Where these two guys in Atlanta had this little diner for 20 years, and they're basically getting by. And then one day they invented the chicken sandwich and sold it in a mall, and the rest was history. So we think that bridging an institutional relationship to getting a wealth management client is our chicken sandwich.
Right.
So we focus a lot of time, energy, resources, people, and it is a significant part of how we grow our wealth management business. It's a unique position we're in, with now 4 million participants on the retirement plan side, and really good wealth capabilities. Now, we're not in the rollover business, as you know, but so we're excited about that. And a lot of the wealth RIAs are not growing.
Why is that?
Well, I think some of it's lifestyle. They have really successful businesses, and they get to the point where life's pretty good, and they wait for the phone to ring, and it's all good. But to try to take that to the next level, and when they join us, something like the bridge can help them do that. So we think it's a big part of our business. It's a large part of our wealth growth, and we're going to continue to invest in it.
And are you seeing, this is the final, are you seeing any of the RIA aggregators interested in retirement? We saw creative planning by Locked In.
Sure, yeah.
But are you seeing that? Because I haven't seen it yet.
Well, I mean, that was obviously the one that was headline news. But I can tell you most wealth-focused RIAs have retirement business, and they don't think it's a big part of the business. But yet, if you carve it out, it would be somebody you might invite here to the aggregator event. So I think, so those types of firms want to grow that. And then there is the reverse, where if you have a retirement plan, it's going to create wealth. And the same thing if you have a wealth client. So it does go both ways. But I would say it goes mostly from institutional relationship creating a wealth client than it does the other. That's the reverse bridge. It doesn't happen as much. Yeah.
Cool. Well, thanks for your time today.
Thank you, Fred.
And thank you for watching RPA Edge on wealthmanagement.com.